Hi there. In this video, we compare online and local accountants for UK construction trades and how the choice can affect day-to-day compliance.
When you work in the construction trades, your day is consumed by managing sites, sourcing materials, and hitting deadlines. By the time you get back to the truck, the last thing you want to think about is paperwork. For decades, the standard routine for a sole trader electrician or ground worker went like this. You bill, let's say, £52,000 in a year. You spend $24,000 on materials and tools. And every January, you hand a shoebox of receipts over to a local accountant to sort out your self-assessment. But the new Making Tax Digital rules strictly assess your reporting threshold based on your gross turnover before expenses, not your taxable profit. In our electrician's case, their taxable profit is only £28,000, but that £52,000 gross income places them directly into the Phase 1 mandatory reporting category for the 2026-27 tax year. Because of that categorization, attempting to use the old shoebox method now automatically triggers HMRC penalty points for missing mandatory quarterly digital updates. HMRC's shift to digital quarterly updates makes the traditional annual review a high-risk liability for any tradesperson above the £50,000 income threshold. We are Atlas Tax Advisors, and we specialize in helping UK businesses navigate precisely these kinds of complex, high-stakes HMRC regulations. Right now, construction professionals are facing a specific dilemma. Do you hire a local accountant you can sit across a desk from, or a cloud-based online specialist you may never meet in person? Accountancy for trades now requires competence in 3 specific UK compliance regimes that most generalist practices rarely touch in depth. This Venn diagram maps out the 3 specific compliance regimes unique to UK construction. The first circle represents the construction industry scheme, which requires strict monthly tracking and precise reconciliation of deduction statements, rather than an annual review. The second circle is the domestic reverse charge for VAT. This dictates strict, non-standard rules for how subcontractors must issue invoices and report net values without entering output tax. The third circle is Making Tax Digital for income tax, introducing rigid quarterly reporting demands that require organized digital records from day 1 of the tax year. The overlapping center of these 3 pillars creates a specific construction tax trap that generic high street accountants are rarely equipped to navigate. Let's look at how the online construction specialist operates. These are typically subscription-based practices running on fixed monthly fees. They handle high volumes of tradespeople by integrating directly with MTD-compatible cloud software. The result of this specialized model is speed and accuracy. They automatically track your monthly CIS deduction statements and process frictionless quarterly MTD submissions because they execute the exact same workflow for hundreds of identical clients. The trade-off is how you communicate. You interact asynchronously through digital portals, email, or scheduled video calls. You lose the ability to drop into a local office for spontaneous advice. Now weigh that against the local generalist. This is the mixed practice firm down the road, whose typical client roster includes retail shops, local cafes, and private landlords, alongside a handful of builders. This comparison matrix shows where generalists fail. They frequently put subcontractors on flat rate or cash accounting schemes, strictly incompatible with reverse charge supplies. These compliance errors force you to issue credit notes, reissue invoices, and submit costly retrospective corrections to HMRC using Form VAT 652. You have to weigh the exact trade-off. You gain the reassurance of a handshake and a face-to-face meeting, but you severely risk your operational cash flow due to hidden systemic compliance errors. For your daily, monthly, and quarterly compliance needs, the specialized software systems of an online portal vastly outpace the geographic proximity of a local generalist. However, online portals have hard limits, particularly when a business begins to scale rapidly. Consider a rapidly expanding construction business. The owner is transitioning from a sole trader to a limited company, operating simultaneously as a contractor and a subcontractor on different projects, and hiring their first PAYE employees. This scenario requires profound, bespoke financial modeling. You have to calculate optimal director salaries versus dividends, factor in employer national insurance, and properly manage complex CIS setoffs between incoming and outgoing deductions. This is where a local construction specialist provides immense value. They possess working knowledge of the regional commercial landscape and understand the typical contract scales in your area, allowing them to assist directly with strategic business planning. The trade-off here is cost. These premium face-to-face advisory services command significantly higher hourly rates or annual fees compared to the predictable fixed-fee subscriptions of an online portal. When you face major structural transitions, you need nuanced, proactive conversations. A high-end specialist delivers that depth, justifying their premium cost. But if you ignore these 3 critical compliance pillars, you invite an immediate, devastating financial and bureaucratic lockdown on your entire business. In April 2026, HMRC introduced severe new enforcement rules regarding gross payment status. The trigger for these penalties is incredibly low. Relying on a budget generalist who misses a single VAT return deadline or files a CIS return past the 19th of the month immediately fails HMRC's compliance test. Under the 2026 rules, HMRC now has the power to instantly strip your business of its gross payment status for these compliance failures and bar you from reapplying for up to 5 years. Trying to save a few £100 on accounting fees can result in an automatic 30% tax withholding on every single future contract payment you receive. Treating construction tax as simple, generic bookkeeping is a catastrophic financial risk under this strict enforcement regime. Let's map this on an effort versus complexity chart. First, the straightforward sole trader earning £30,000 to £60,000, comfortable using mobile apps. They should use an online specialist to maximize CIS refunds. Second, the complex multi-contractor limited company managing a full payroll. For this group, you absolutely require a high-end, regulated local specialist capable of managing corporate extraction and aggressively defending gross payment status appeals. The long-term financial health of a construction firm depends on an accountant's ability to navigate the intersection of CIS, VAT, and mandatory digital reporting. Before you sign an engagement letter with any accountant, you need to ask 3 specific vetting questions to test their expertise. First, ask if the firm is regulated by a recognized professional body like ICAEW or ACCA. This ensures they carry professional indemnity insurance if they provide incorrect tax advice. Second, ask exactly how many active CIS construction clients they currently manage. If they only handle 2 or 3, they are a generalist, not a specialist. Third, ask if they have fully configured MTD-compliant software ready for you to use today. If they don't, they are a compliance risk to your business. Navigating CIS, VAT reverse charges, and MTD deadlines is not a DIY job. Contact Atlas Tax Advisors today to secure proactive, specialized construction accounting for your business. This video provides general guidance based on 2026-27 UK tax rules. Always consult directly with a qualified professional regarding your specific financial circumstances before making decisions.